Hello, this is John Milligan, Director of Investment Operations with Wealthwise Financial Services, bringing your weekly market update. Well, after the $900 billion fiscal stimulus bill was signed, major U.S. stock indices moved higher. The S&P 500 stock index is finishing the year up more than 16%. The Dow Jones Industrial Average and the tech-heavy NASDAQ gained 7.25% and 43.6% respectively. The Dow and the S&P 500 finished at record levels despite the public health and economic crises. And U.S. Treasuries gained as well, as their yields moved slightly lower. 30-year Treasuries finished the week yielding 1.65%. Now, while government bonds didn't offer attractive levels of income during the year, they, according to Barron's, lived up to their billing as a stock market hedge in 2020. Rates plunged as stocks collapsed in March, and the Treasury market finished 2020 with yields not much above the pandemic panic lows and down 0.5 percentage point or more for the year. Now, looking back, early in 2020, financial markets were concerned about the following: slowing U.S. economic growth, rising tensions between the United States and Iran, ongoing trade tensions between the United States and China, the pending U.S. presidential election, and the UK's Brexit negotiations. As the COVID-19 virus began to spread across the globe, stock markets dropped sharply around the world, and the longest bull market in U.S. history came to an end. The downturn reflected doubts about the U.S. government's response to the crisis. But the CARES Act and central bank support inspired optimism in financial markets. The bear market in the S&P 500 index became the shortest in history, lasting just 33 days. From late March through August, despite significant economic damage and persistent virus spread, the S&P 500 recovered its losses, gaining about 55%. The economy also began to recover in the second quarter, and the United States saw gains in employment, consumer spending, and other economic data. However, by late July, there were signs the recovery might be faltering. According to Deloitte, daily credit card spending, which by early April had declined 32% from pre-COVID levels, was up just 4.7% below the pre-COVID level on June 22nd. But by July 19th, it was falling down 6.4%. In Congress, they then went back to work and spent much of the latter half of 2020 negotiating a new stimulus bill, which passed last week, and $600 stimulus checks have begun arriving in Americans' bank accounts. In the meantime, several COVID-19 vaccines have been developed and approved, and inoculations have begun in several countries. The vaccine availability boosted financial market optimism. Investors anticipate vaccines will bring the coronavirus under control and usher in a return to business as usual by mid-2021. So again, this has been John Milligan with Wealthwise Financial Services. We wish you a happy and prosperous new year. Thank you.